All right, it's this week's Money Minutes. Ryan Payne, Courtney Dominguez. We're here in Central Park. It's the beginning of fall, just like an amazing time to be here in New York City. If you're not here, you should come join us. And today what we want to talk about is one of our favorite topics, and hopefully one of your favorite topics too, is saving money on taxes. And one thing we want to talk about specifically is a lot of times you may have losses in your portfolio, and we're going to show you how to use those to your benefit.
Now, if you have an investment that's gone down in value, that means you're showing a loss on it. The good news with that is you can actually use that for tax purposes, but the only way to actually do that is you have to sell that investment to be able to utilize it on taxes. Now, the problem is if it's gone down in value and I sell it, then if it ends up going back up, I'm gonna miss out on the market appreciation. So is that something I should be thinking about? Okay,
so to Courtney's point here, you put this money into this investment, it goes down in value, and now if you sell that investment, you can book what you call a loss. It's the difference between what you bought it for and what you sold it for at that loss value. So if you bought it for $10,000, now you sell it at $5,000, you have your loss. And just like if the tide was down and you were in one boat and you jumped to another boat, and then the tide rises again, it's the same thing as selling out of that investment while it's down, buying another investment, so when the market goes back up again, you're still in the market, but now you have that tax loss you can use for your benefit.
Now you may be thinking, well, why do I need this loss? Well, how is that gonna be good for me? There's two reasons you can use this. Number one, let's say down the line we've made a lot of money on our investments and we're looking to sell something. That also means we're gonna owe taxes on the money we made. But if we have this loss that we've already booked, it will offset that. And the good news is you can use this down the line. It doesn't have to be tomorrow or even this year. You can use this 3 years from now or 5 years from now. So it's a good thing to keep in your back pocket and use whenever you need it in the future.
Yeah, so that's one way you can use that losses. Remember, you have to sell the investment to use the loss at a loss. Hopefully that makes sense. But the other thing you can do too is you can deduct the money against ordinary income. Every year, you can take $3,000 of that loss and take it against your income. So if you made $103,000 last year, you only have to show that you made $100,000 because you use that $3,000 loss. And again, you can use that every year until you use it up.
All right, so to wrap this up, now if you ever have a loss on any investment that you own, you can utilize this to your advantage because you can actually write it off on taxes. The best way to do that is what we call a tax swap, where you can switch out your investment into a like investment to be able to write that off on your taxes. Now, if this is something you're thinking, should I be using this? Is this something I'm missing out on any opportunities? We actually do complimentary financial reviews every week, and if that's something you're interested in, send an email to moneyminutes@paynecm.com with this title. See if you qualify for one of those weekly reviews.
If you love our content, we hope you do, you can subscribe to our channel, click on the link, and as always, be bullish.